Hello viewers, welcome to my channel. I am Hashim Ali Khan. Presently I am giving the lectures on the subject Income Tax 2. In this subject the topic is income from other sources. So already I have prepared the video on the introduction and provisions for taxability of income from other sources. Hope my regular viewers are watching those initial videos, and already 10 problems I have solved on computing income from other sources. So in this income from other sources, the main head is income from interest on securities. So how to calculate income from interest on security, that is a major part of income from other source. Apart from that, so many other items which will frequently come under income from other sources we have done. So if you are new to my channel, I suggest you to visit the playlist of my channel. I have uploaded so many videos on different subjects like cost accounting, corporate accounting, advanced accounting, financial accounting, business statistics, financial management, investment management. Many more videos I am going to upload in future also. So select your concerned subject, select the video, watch till the end, increase your knowledge from these videos. Now before starting the next problem number 11, I expect my viewers to have a hard copy printout of the problems which I have provided in the link under my description. So take a printout, keep it ready before watching the problems. Now I am reading out problem number 11. See carefully, 11th problem. Mr. Sravan's residential status for the previous year is resident and ordinary resident. Compute his income from interest on security for the current assessment year. So we are required to compute income from interest on securities. Then 1, 2, 3, 4, 5, 6, 7, 8. 8 items are given. The banker charged 1% gross interest as collection charges. Interest paid on loan taken to purchase tax-free Kerala government security 3,000. Remember, two deductions are allowed while computing income from interest on securities. The two deductions are deduction under section 57. First one, collection charges. Second, interest paid on loan taken to purchase the security. These two deductions are allowed. Now one by one we'll discuss. Rupees 2 lakh, 8.25% tax-free Kerala government securities. It's a tax-free government security. It's a tax-free government security. So gross interest is equal to face value into rate by 100, one step. Only one step. Gross interest is equal to face value into rate by 100. 2 lakh into 8.25 divided by 100. Then 7 lakh 20,000, 14% tax-free debentures of Wipro Company Limited. That means it is a tax-free commercial security. Wipro Company Limited, commercial security. Two steps. First we calculate net interest. Net interest is equal to face value into rate by 100. Then we'll apply gross interest. Gross interest is equal to net interest into 100 by 90. So if it is a tax-free commercial security, two steps. If it is a tax-free government security, one step. That point you remember. Then 1,50,000, 10.5% tax-free bonds issued by HUDCO. It is fully exempted from tax. So simply you have to write down this security is exempted from tax security. So interest is not taxable. Then rupees 2 lakh, 14% secured debentures of Tata Motors unlisted. Listed, unlisted, no difference at all. It is given secured debentures of Tata Limited. It is not given tax-free. When it is not given tax-free, it is a less tax. And less tax means only one step. Gross interest is equal to face value into rate by 100. So 2 lakh into 14 by 100. Next, rupees 5 lakh, 15% Mundra Port Trust bonds. Mundra Port Trust bonds. Interest is payable 1st January and 1st July every year. Normally interest on security will be paid semi-annual. That means in a year 2 times. Every 6 months interest will be paid. Example, if the security face value is 1 lakh and 10% is the interest. So 10% of 1 lakh, 10,000. So 10,000 per annum is the interest. But normally the interest will not be paid annually, it will be paid semi-annually. Every 6 months 5,000. First 6 month 5,000, second 6 month 5,000. Like that twice it will pay. So here also it is given interest is payable 1st January, 1st July every year. Next one, rupees 50,000, 13% Haryana state government loan. It is not given tax free, so it is a less tax. When it is less tax, one step, gross interest is equal to face value into rate by 100. 50,000 into 13 by 100. That's all. Interest is payable 30th June and 31st to December. Then 7th point, rupees 75,000, 12% fixed deposit in Mahesh Cooperative Urban Bank Limited. Remember, interest on fixed deposit in a bank, that is taxable under income from other sources separately. It will not be included under interest on securities. So interest on bank deposit is separately taxable under income from other sources. It will not be considered while calculating interest on securities. Rupees 1 lakh, 14% tax-free debentures of R Company Limited. R Company Limited means it's a commercial security. Tax-free commercial security, 2 steps. First NI, then GI. Net interest, face value into rate by 100. Gross interest, net interest into 100 by 90. That's it. The banker charged 1% gross interest as collection charges. Interest paid on loan taken to purchase tax-free Kerala government security 3,000. So both will be allowed as deduction. Now see carefully here. Computation of income from interest on security of Mr. Sravan. Rupees 2 lakh, 8.25% tax-free Kerala government security. It's a tax-free government security. So one step. GI is equal to face value into rate by 100. 2 lakh into 8.25 divided by 100, 16,500 over. Second, rupees 7 lakh 20,000, 14% tax-free debenture of Wipro Company Limited. It is a tax-free commercial security. So 2 steps. First NI. Net interest is equal to face value into rate by 100. 7 lakh 20,000 into 14 by 100, 1 lakh 800. Now gross interest is equal to net interest into 100 by 90. So 1 lakh 800 into 100 by 90, you are getting 1 lakh 12,000. Next one, rupees 1 lakh 50,000, 10.5% tax-free bonds issued by HUDCO. It is fully exempted from tax security. No tax is applied on interest on this security. Put a dash. Rupees 2 lakh, 14% secured debentures of Tata Motors Limited. 14% secured debentures. It is not given tax free. So it is a less tax. When it is a less tax security, simple formula, one step. Gross interest is equal to face value into rate by 100. What is the gross face value? 2 lakh. 2 lakh into 14 by 100, 28,000. Next one. Rupees 5 lakh, 15% Mundra Port Trust bonds. It is not given tax free. So it is a less tax. When it is less tax, one step. When it is a less tax security, whether it is a government or commercial, only one step. That is GI is equal to face value into rate by 100. So 5 lakh into 15 by 100, 75,000. Next one, 50,000, 13% Haryana state government loan. It is not given tax free. So it is a less tax. Again less tax. GI, gross interest is equal to face value into rate by 100. 50,000 into 13 by 100, 6,500. Next one, 75,000, 12% fixed deposit in Mahesh Cooperative Bank. It will be separately taxable. It will not be included in interest on securities. Separately taxable. So put a dash. Then rupees 1 lakh, 14% tax-free debentures of R Company Limited. Specifically given tax-free, tax-free commercial. R Company Limited means commercial. So tax-free commercial security, 2 steps, NI and GI. First NI, net interest. Face value into rate by 100, 1 lakh into 14 by 100, 14,000. GI, gross interest, 14,000 into 100 by 90, 15,556. This is the gross interest. The total gross interest. Take the total of the gross interest, take the total of the outer column, 2,53,556. This is the gross interest. Less deductions under section 57. First, collection charges 1%. It is given collection charges 1% of gross interest. So 1% of 2,53,556. It comes to 2,536. Second, interest on loan taken to purchase the security. Last line it is given in the problem. Interest paid on loan taken to purchase Kerala government security. That will be allowed. 3,000. So total deduction 5,536. Subtract. You will get income from interest on security 2,48,020. It is only asking you to calculate interest on securities. This is the income from interest on securities. That's all. So this is the end of problem number 11. Now see the problem number 12. Mrs. Ria submitted the following particulars to you. Compute the income from other sources. In this problem we have to compute income from other sources. What are the items given? Received winning from lottery 70,000. Received. First of all, winning from lottery is a casual income. It's a part of income from other sources. But here winning from lottery should be taken gross amount, not net amount. I already told you in the previous video. Winning from lottery, the winner will get the net amount after TDS. After TDS of 30%, the net amount will be paid to the winner. The issuing authority will deduct 30% tax. So amount received, winning from lottery, amount received is the net amount. We have to gross it up. So how to gross? Take the net amount into 100 by 70. Because TDS rate is 30%, so we multiply 100 by 70. So here you can see computation of income from other source of Mrs. Ria. Received winning from lottery 70,000. This is the received amount, net amount. We have to gross down. So gross amount is equal to 70,000 into 100 by 70, 1 lakh. So gross amount of winning from lottery is 1 lakh. Next, received from agricultural land in England. Agricultural income in India is exempted. Whereas agricultural income received outside India, it is fully taxable under income from other sources. So income from agricultural land in England, 1,24,000. Next one, rent from sublet of the house. Subletting. Rent from sublet of the house. It's a part of income from other sources. So rent from subletting of house, 40,000. From this, the expenditure paid will be allowed as deduction. In order to earn this income, rent paid 16,000, repair 1,000. So rent paid 16,000, repair 1,000. These two are the deductions. Deductions allowed by Income Tax Act to earn this income. So 40,000 minus 16,000 minus 1,000. 23,000 is the net income. Next one is rent from hiring the machinery. Rupees 2,000 per month. So rent from hiring the machinery. Machinery is given on rent. So rent from hiring the machinery 2,000 per month into 12, 24,000. Now expenditure incurred, repairs to machinery 5,000, depreciation 8,000. 5,000 repairs and 8,000 depreciation, deduct. 24,000 minus 5,000 minus 8,000. 11,000 is the net income. Next one, family pension, rupees 8,000 per month. So family pension is also a part of income from other source. So family pension received, there is a deduction under section 57(2)(a). List of the following two. First we take family pension 8,000 into 12, 96,000. From this, deduction is allowed under section 57(2)(a), which is list of the following two. 1/3 of pension received. 1/3 of pension. Pension is how much? 96,000. So 1/3 of 96,000, it comes to 32,000. Or fixed amount given by Income Tax Act. How much is the fixed amount? 15,000. So 32,000 or 15,000, whichever is less, will be allowed. So 15,000 is less. So deduct 15,000, 96,000 minus 15,000, 81,000 is the income taxable. Now take the total. Total of the second column, outer column, 3,39,000. This 3,39,000 is the income from other sources. So you have to remember the provisions. What are the provisions? Like a family pension. Family pension के लिए you have to remember deduction under section 57(2)(a). 1/3 of pension received or fixed amount of 15,000. Similarly, received from winning from lottery. Winning from lottery, we should take the gross amount, we should not take the net amount. The winner who receives the lottery amount, there's a net amount after deducting TDS. Now we have to gross it. The net amount into 100 by 70. Similarly, income from agriculture outside India, all these things. Now we'll start the next problem, that is problem number 13. See the 13th problem. The following incomes are received by Mr. Ravi. Compute the income under the head income from other sources. So we have to compute income from other sources. 1, 2, 3, 4, 5, 6 up to 10 points are given. One by one we'll take. Computation of income from other source of Mr. Ravi. Particulars, amount, inner column, outer column. First one, income from agricultural land in Punjab, rupees 2 lakh. Expenses on agriculture 20,000. See, agricultural income earned, received in India is fully exempted under section 10. So here Punjab is in India. So agricultural income earned in Punjab, it is fully exempted from tax. Simply you have to give a note. After completing the solution, give a note that agricultural income earned and received in India is fully exempted. No deductions are allowed. When income itself is exempted, there is no question of deduction. Second point, income from agricultural land in Bangladesh 50,000, expenses on agriculture 17,000. There is a rule in Income Tax Act. Any expenditure incurred to earn the income will be allowed as deduction. So in order to earn this agricultural income 50,000, he has incurred an expenditure of 17,000. So deduct 17,000. So here income from agriculture in Bangladesh 50,000 less expenses 17,000, outer column 33,000. Next one, director's fees from Good Luck Company Limited. Director's fees is also taxable under income from other sources. So director's fees 1,80,000. Next, rent from sublet. Rent from sublet of the house 72,000, repairs for the house 5,000, municipal taxes 1,500 and rent paid for sublet portion 21,000. So rent from subletting we got 72,000. So rent from subletting 72,000. From this all the deductions are allowed. What are the deduction? Repair 5,000, municipal taxes 1,500, rent paid 21,000. Deduct all the three amounts, you will get 44,500. This is the net income. Next one, rent from open land in Pune. Rent received from open land, that is also taxable under income from other sources. So rent from open land 16,000. Now 9% tax-free debentures of UP Sugar Company 50,000. So tax-free debentures, this is called interest on securities. So we'll take interest on security. 9% tax-free debenture of sugar company. It's a tax-free commercial security. Tax-free commercial. So two steps, NIGI. First NI, net interest. Face value into rate by 100, 50,000 into 9 by 100, 4,500 is the net interest. Now grossed up. The gross interest is equal to net interest 4,500 into 100 by 90, 5,000. Secondly, 15% bonds of IDBI 3,000. So 15% bonds of IDBI. So it is a less tax. Nothing is given, so we assume it as less tax. So directly one step. GI, gross interest is equal to face value into rate by 100. So face value 3 lakh. 3 lakh into 15 by 100, 45,000. Next one is interest received from debentures of X Limited. Interest received from debentures of X Limited. So when received amount is given, it means it is the net amount. Received amount is given, it is the net amount. Now we have to gross it up. So gross interest is equal to net interest into 100 by 90. So 18,000 into 100 by 90, 20,000. So these three are income from interest on securities. Add up 5,000 plus 45,000 plus 20,000. 70,000 is the interest on securities. Next one, dividend on preference shares 13,000. Simply you have to give a note. Dividend on preference share is fully exempted from tax. It will not be taken into consideration. Honorarium for delivering lecture. Honorarium is the voluntary amount received on delivering a lecture, that is also an income which is taxable under income from other sources. But expenses incurred are 15,000. By incurring 15,000, he got an income of 69,000. So 15,000 will be allowed as deduction. The honorarium received for delivering lecture 69,000, less expenses incurred 15,000, deduct 54,000. That's all. So we have taken all the incomes, take the total, you will get 3,97,500. So this 3,97,500 is income from other sources. So two working notes also you have to write in this one. First working note regarding income from agriculture in Punjab is Indian agriculture income fully exempted under section 10. Lastly, dividend on preference shares is fully exempted from tax. These 2 points you have to give it in working note. That's all. So this is the end of problem number 13.